Cipla has come out with its numbers. The pharma major has beaten street expectations on the profitability front. However, revenue from operations, operating income and margins, they have missed expectations. Cipla reported consolidated net profit of 939 crore for the quarter gone by, marking a 79% jump from the year ago period. The street was expecting the figure to come in somewhere around the 900 crore mark. Revenue from operations surged by 7.4% YOY to 6,163 crore. The number was again marginally ahead below the street expectation, which pegged it to come at around 6,224 crore. At the operating level, EBITDA, which is earnings before interest, tax, depreciation and amortization, rose 12% YOY to 1,316 crore, and margins stood at 21.3%, which is about 80 basis points higher from the same period last fiscal. And according to the company, margin decline in Q4 was due to seasonality effect, and this decline is on a quarter-on-quarter basis, not on a year-on-year basis. The company has, by the way, also declared its highest ever dividend of rupees 13 per share, and the record date of payment of final dividend has been set at August 2nd. Now, shares of the company have reacted negatively to the results, as it slipped in the red and ultimately settled there with a cut of about 1.5% or so. Amit, I'll come to you. What's your assessment of Cipla's Q4 report card, and what should investors do now with the stock post the Q4 results?
I think the net profit was a little higher than most of the street estimates. It was up about 80% or so. But it is worth noting that the sharp spike in the Cipla bottom line for this quarter, Q4 that is, that was mainly due to a low base. As last year the company's net profit was impacted by a one-time impairment charges of about 180 crores. So that's why the bottom line has seen a little bit of a sharp. The revenue was dragged a little lower by the divestment of one of their subsidiaries based in Uganda, the Quality Chemical Industries. Apart from that, I think the Indian sales generally have suffered from a soft seasonal demands. Usually the January to March quarter, it is a little soft for the consumer business. So they have reported only 7% year-on-year increase in the revenue.
Right.
But apart from that, I don't see too much of negative things or negative pointers in the result.
All right.
They've filed for few more drugs which can be good for the next 2 to 3 years. The company plans to launch 4 peptide assets also in FY25. So it
Right.
looks good, but I would say valuation wise it's pretty much full at this price of about 1350.